The January jobs and unemployment report number just came out this morning, and it came out hotter than expected on the establishment survey at 353,000 compared to the 185,000 economists estimated. The unemployment rate stayed unchanged. Because of this completely prices out a March rate cut, and it substantiated what Jerome Powell said at the Fed meeting the other day. And this honestly decreases the chances of a May rate cut as well. I honestly think a rate cut will happen in maybe Q3 or Q4. But something interesting with the data with this report, because the household survey showed that there was a decline of 31,000 jobs for the month of January, which is in line more with what we've been hearing in the news in terms of companies announcing layoffs. So honestly, I think that strong establishment survey number, 353,000, it might not be completely accurate. Obviously, we have to see, because the household survey shows a decline of 31,000 jobs. But the markets are still rallying despite the stronger than expected 353,000 number. We had big tech earnings come out last night. Meta and Facebook blew past estimates and issued really good guidance for 2024. They announced a dividend and a stock buyback, and Meta stock is up 21%. I actually got in at late 2022, and I'm up about 395% on the stock. So I'm proud to see the increase today. Amazon reported really good earnings as well, and Apple's iPhone sales were strong, but their China numbers were a little weak, and Apple's trading about flat right now. And then Amazon, based on what I was saying before, Amazon's up about 8% as of now. Let's see how the market ends up trading today. But the market's rise, despite the strong establishment survey jobs numbers, is pretty encouraging in my opinion. I still think the run up in the stock market is a little bit too fast, too quick. I thought we wouldn't get where we're at the S&P 500 until a little bit later on in the year. So I still think at some point we might see a little bit of a pullback in profit taking, maybe 5 to 7%. That still, I think, holds at some point this year, especially if the stock market moves this quickly closer to the year-end price target I have for the S&P 500, which is in that 5,200 to 5,400 range. If it gets really close to that early on, then yes, I think we're ripe for a consolidation or pullback. But either way, it's encouraging from the big tech earnings last night and the jobs numbers. Although we saw obviously a difference between the establishment and household survey, everything's encouraging right now.